Yes. Of course, it is Wednesday, and if it is Wednesday, you know what day it is, and if it is 9 p.m., you know what time it is. It is the summit o'clock, and we are live. And of course, in studio, I have amazing guests. I'll be speaking about them in just a short while. But in the meantime, I want us to be able to understand that this particular program is a space or place where we scale the heights to be able to bring you all the kind of conversations that matter to you, not just here in Rwanda, but from the African continental perspective. What are we doing here that could impact the continent? Those are some of the conversations that we have right here on the summit. It is an interactive conversational show, and of course all you need to do is to always try as much as you can to be part of the conversation. All you need to do is join us across our social media platforms. There's what we call the X platform, X us. The hashtag to use is the summit, RW. We'll be able to get in touch with you. You can also X me on at Eugene and Dango. We're still getting used to this kind of changes in terms of the names right there. Now, tonight on the program, we're talking about what you need to know about what the BRD sustainability linked bond is. Of course, if you have any questions, if you have any concerns, if you have any information that you needed to know about this specific sustainability linked bond, this is definitely the platform where you'll be able to get all that information right here. And what do we know about this sustainability linked bond? There's what you need to do to be able to apply for companies. We'll be able to get more details about this right here on the show. There's that information right here on your screen right now. You need to open a central securities depository, which is called CSD account and investment account with the National Bank of Rwanda. And of course, this can be done through a local licensed broker or custodian. Definitely, this is information that we'll be delving deeper about right here on this particular program. Of course, on this particular show, we'll be able to talk a bit about the details, the nitty-gritties, and of course, where or the list of the licensed brokers here in Rwanda. Of course, there's BK Capital Limited, there's FIDA Securities Rwanda, there's African Alliance Rwanda, among others. We'll be able to get more details about what is informing this decision for the Development Bank of Rwanda, or BRD, to get into this kind of sustainability-linked bond. And what does it even mean? And of course, how significant will this be in terms of the call for sustainability amongst corporate institutions? Allow me, ladies and gentlemen, to welcome our panelists in this particular program tonight. We have none other than Pishet Kameta Sainzoga, who's the CEO of BRD. Thank you for making time for the program.
Thank you for having me, Eugene.
I was telling you, it's been a long time coming.
I
always
know.
wanted you to join the show, and today, look, here we are.
I owed you a show. Today I'm paying my debt.
Here we go. Thank you so much for making time. And making a premiere for the first time on the summit also is Siongo Kisoso, who's actually the Managing Director, BK Capital. Thank you so much, sir, for making time.
Thank you for having me here.
Amazing. And what an important conversation that brings us together here. And we're talking about this sustainability-linked bond. But before we even go into the details, I want to start with you, Pishet. I mean, I was taught, well, I always say start with the ladies. That's what I always told. So I want to start with you. Sustainability-linked bond. But first, what is informing this concept? We've heard about bonds. We've heard about so many, listings and stuff like that. But the word sustainability, it's coming at a time where ESG is no longer something that you do as a corporate institution because you want to, but it is part of the obligation of listed companies. Are you doing this because the regulator is saying, I have a stick, and if you don't do it, kanyafu? Or why are you doing it? What is informing this decision?
So what's informing this decision is the tremendous growth that BRD has actually had over the past 3 years. And if you look at our portfolio loan, like our loan book, in 2019, we had a loan book of about 70 billion or slightly below. If you look at today, we have a portfolio loan book of close to 400 billion. So the growth has been phenomenal over the past 3 years. And you cannot grow without money. So what drives this is we want to grow further. We want to be bigger, and the best way to be big is actually to raise money, but raise money in line with our DNA. And our DNA at BRD, of course, is development. Now, we know today you can't do development without sustainability. So this is how we land at a sustainability-linked bond. We need to grow. We need money. We wanted to bring a new asset class. We love innovating at BRD. So we said, okay, what's not existing that we can bring to Rwanda and the East African market? And we fell on the sustainability-linked bond. I must say, the idea was kind of, whispered in our ear by the World Bank, and they've done blogs and studies about the benefits of the sustainability-linked bond. And they really wanted, an institution that could try it out with them. And of course, since we love innovation, we always put our hand up for something new.
And we're talking about an inaugural sustainability-linked bond. Every fast has its fears, challenges, opportunities.
Yes.
For you, as you embark in this very ambitious, that you say it's actually something that is in the DNA of the BRD, what fears, what opportunities did you see when you're in the boardroom meetings, crafting this to the point where you come to the world and say, hey guys, here we are? What are those?
Well, the kitchen was busy. We started this conversation in October, and here we are less than a year later, late October last year, doing this. But I want to also emphasize that for us, it's our first bond. So as BRD, it's our first corporate bond. For the World Bank, it's the first time they're securitizing a corporate bond, that is linked to sustainability KPIs. And then it's also the first SLB bond, on this market. So as you said, a lot of firsts. Now, if you have a lot of firsts, the first thing is, are we trying to kill too many birds with one stone? Is the first question that you ask yourself. But then at the same time, it's an opportunity. Why not? Yeah. The second was really trying to understand in the context of Rwanda, in the context of East Africa, what does a result framework look like? And for that, I must say, our transaction advisors, BK Capital and Rand Merchant Bank was stellar. So developing a KPI framework, a key performance indicator framework that was credible, that wouldn't look like greenwashing was very important. So that was a learning curve. And then finally, you're taking a risk on the market because you're putting up a bond, and I hope we're going to talk about the bond in more details. Correct. That is a new instrument. So the last question is, I'm trying to do something new. Will the market get it? Will the market love it? Yeah. And we see the vision, we see what's exciting about it, but you want to make sure that the market also sees it.
The market also sees it. I want to talk to BK Capital Managing Director, Siongo. Just give us an overview. I've heard what CEO Pichet just mentioned, and of course, it paints a very rosy picture. You can see the journey and you see the intrigues, and I can literally visualize them, sealing whatever they foresee as loopholes, potential loopholes. I want to understand the overview of BK Capital in this partnership. Why did you visualize it or see it as something significant to even be part of? And in what way are you even plugging into this?
All right. Maybe I'll start with BK Capital.
Yes.
So we're a licensed investment bank and fund manager. We're part of BK Group, and our core mandate is to help Rwandans and people outside of Rwanda to invest and to seek alternative sources of finance. And that's really where we come in. On the investment part, we have years of experience in putting together solutions that can benefit people looking for saving options and investment options here in Rwanda. And on the alternative financing part, we understand the regulatory requirements of actually issuing a bond. So we worked with BRD through the journey of ensuring that all the documents being prepared meet the disclosure requirements of the Capital Markets Authority. And in terms of packaging this particular instrument, we put it in a way that investors would be interested in. So that means having the right return, putting in the right tenor, having the right offer period, really so that BRD can get an adequate amount of bondholders and for the right sum investing in this particular issuance.
Right, that's very interesting. We'll come back to probe that a bit. And of course, Pichet, you alluded earlier on that we'll definitely get some time to speak a bit more about the bond itself. And I want us to be able to talk about the structure of this particular bond, its pricing, and of course, the tenure and any unique features that make it attractive to investors, because he spoke about that is part of what has to be looked into to ensure that it actually does that.
Well, I think it's a beautiful bond. Of course, I'm biased. But the program that we have actually is a 150 billion bond issuance. This is the first tranche, if I can call it like this.
Yeah.
And we've slotted in 30 billion francs. So it's significant enough to entice the market.
Yeah.
What is probably the most exciting part for us is the sustainability part, because what it means is that we as BRD have committed to 3 performance indicators that are directly related to sustainability and SDGs. Yeah. And if we meet these indicators, we get a small reward. But we wanted to make sure that this small reward in terms of pricing doesn't come at the cost of exciting investors. So if you look at the coupon rate, people tend to ask me, so what's the rate? What's the rate?
Correct, yes.
Well, the rate is above the treasury bond, right? The rate is 12.85% per annum, which the interest can be paid twice a year. So you get your interest payment 2 times. So if you have tuition fees you need to pay, if you have small expenses, you can use that. And then if you want your principal at some point, it's a tradable bond. So you can take it to the stock exchange and you can actually, sell it if you don't want to keep it to maturity. Now the next question is, what's the maturity?
Correct.
The maturity is 7 years. And that's because as BRD, we want to make sure that we're able to invest in projects that are long-term, right? And that's why we picked a maturity that's, medium term, but not too short, so that we can also invest in projects that have a decent maturity in terms of tenor.
Yeah, we'll talk a bit about the timelines as well.
Yes, but Eugene, there's one thing that's different from the other bonds on the market.
What is that?
Which is the 30% of first loss. So if anything happens, 33% of the bond value that you're purchasing is guaranteed by the World Bank financing. So this is the first time that we really have a securitized corporate loan, which entices the investors even more, because now you have the seal of approval of the World Bank that says, we believe in this transaction, and if anything happens, we're ready, to pay you 33% of your investment. Right,
and we'll talk a bit about the appetite and the trends that we're already seeing so far. But before we get to that, I want to bring in Siongo one more time, and I want to understand the aspect of structuring and managing this sustainability-linked bond. Just take us through this.
So in terms of the sustainability-linked bond, there are 2 parts to it. It is a corporate bond that follows the trends, the regulations, and the structuring habits of typical corporate bonds. And then it's layered with a wrapper of sustainability. So in terms of the structuring of the corporate bond, I'll give a few aspects. It can be a conversation of its own. So one, it's a public offer that has been approved by the Capital Markets Authority, and this particular offer will be listed on the RSE towards the end of October. So for investors coming in, it's a 7-term maturity, but you can have the possibility of selling the bond in between the life of the bond, and we are seeing on the RSE, particularly on the bond segment, that the volume of transactions is increasing, and people are able to actually liquidate these particular securities fairly quickly. So that's on the structuring part in terms of who regulates the public offer. It's going to be on the RSE, following, the in line with the RSE rules. In terms of access, anybody, whether Rwandan or non-Rwandan, can access the bond. As you pointed out at the beginning of the show, I mean, there are 2 requirements you have to have. One is you must have a central securities depository account that you can open with one of the 7 brokers I can see on the screen. And the second one, you have to complete the application form, which is available once again at any of the 7 brokers. So in terms of liquidity, which is a key part of the structure, there is provision for that. In terms of meeting all regulatory requirements, there has been approval from CMA in terms of access. You contact a local broker, and they will facilitate that part of the transaction. So those are some few features on the corporate bond aspect. Then now there's a sustainability part. So BRD are committing to 3 KPIs that are really in line with the SDGs, and Pichette will speak more towards that. So there is a sustainability-linked bond framework that has been prepared by BRD in conjunction with the World Bank that articulates, that gives details on the KPIs, what KPIs these are, what are the outcomes, how will they be measured, and this framework has been assessed by an independent party, and they're called the second party opinion provider. In this case, it's S&P, one of the big credit rating agencies, and they've confirmed, and this information is available on the BRD website, that this bond is fully compliant with the International Capital Market Authority principles, and that really gives this corporate bond the credentials and the credibility to be a sustainability-linked bond. So in terms of structuring, that's at a very high level, key aspects of it.
I understand that, and I appreciate, I want to understand from you, I mean, the pressure, to deliver, Is it giving you sleepless nights? And as you answer that, you'll be able to talk to us a bit about the specific sustainability goals or the targets for this sustainability-linked bond, and how you plan to be able to, or how you actually determine them. First of all, let's talk a bit about that part. Yes.
No pain, no gain, Eugene. You can't do this without sleepless nights.
Yeah.
But one of the things that's exciting, just one more feature that I really love, is that the minimum investment is 100,000 francs. So the youth can come in. Anybody can come in. I think often for Rwandans, the perception is that bonds is for rich people.
Yeah.
But this time, we made sure that the minimum ticket size of 100,000 is available to many Rwandans, and we particularly want to attract the youth into this investment vehicle.
Right.
Now, to your second question, we've picked three performance indicators, and what drove us to pick those three is really the three where we feel as BRD we can add the most value. So the first one is we want to work with all our clients, and you need to remember that close to 60% of our clients are actually financial institutions. Yes. So we want them to be able to have an environmental and social management framework that works, a management framework that is operational. So we've committed that we're going to work with our clients, and it's a big commitment, and making sure that they have a framework that can actually assess the impact that they have on the environment and the social aspects of their portfolio. So that's the first one, and we've committed that 75% of our clients will have this framework in place, and so that's a big one.
Why not 100%?
Well, 100 is tough, 100 means everybody.
Everybody,
even you've seen it's very hard to get everybody. Even in your own family, I'm sure it's hard to get everybody to do what you want. But since we're starting from a very low base of less than 10%, this is really a big jump to get to 75% within 7 years, the 7 years of the bond. Then the second issue is that we still have an issue of women-led projects having access to finance. And you can imagine why this is very close to my heart.
Yes.
But having so many interventions by government for women, we also want to make sure that we practice what we preach, that our own portfolio at BRD, at least 30% of our portfolio goes to women-led projects. Today, we're at 15%. So we're not at zero. But surely we can do better, and we want to make sure that in the next 7 years, we get to 30%. And then lastly, it is loans that go to affordable housing. You live in Kigali, you see the pressure on urbanization. We're encouraging, the young population to come to the cities. The government agenda is really to promote urbanization, but we have a big issue with housing. And our role as a development bank is to provide housing finance. So we want to make sure that, as the developers are doing their thing and creating more units for affordable housing, today we've managed to provide affordable housing loans to the tune of 544 units, which is very low. And we want to move this needle at least to 13,000 units.
Right. Very interesting. Especially, I'm looking at it from the end perspective. Seems very amazing. But I want to hear from, Siongo, what the BK Capital is going to do in terms of contributing towards the achievement of these KPIs. Now you are actually tied together, for lack of a better word. How do you support? What role do you play, or will you play?
I think the role has largely been on the structuring part. So we've ensured that the KPIs and the framework that BRD have put together are fully compliant with the international principles. So in terms of how this will be fulfilled, on the structuring part, there is a penalty to KPI to BRD for not disclosing the fulfillment of these KPIs at a particular date. And we put that proposed it to the BRD management and board, in a view of encouraging people to get into this particular vehicle and see it as credible, and that these KPIs will be fulfilled and will be disclosed. So I think that's the very first. And in terms of the principles, fully aligned in terms of are these KPIs ambitious? Because that's one key thing with the sustainability linked KPIs. You mentioned 100%, but I think the key thing is your business as usual, so you're probably growing at a certain percent. But once you get into these sustainability linked KPIs, the expectation is that you should go over and above your current run rate and do more towards fulfilling the SDG goals.
So there's a possibility that they might even surpass that.
There's a possibility
70%.
they could surpass, but the goal in itself is very ambitious. Because if you look at the curve, in terms of, let's say, affordable housing, for example, the growth has been like this over the past couple of years. But to be able to qualify and get the credentials of a sustainability-linked bond, you have to increase the growth.
Correct.
And then that's a commitment to be able to have the credentials of a sustainability-linked bond. So I think our role largely has been around the structuring, ensuring that it meets all the principles, will be attractive to investors. And I think the one thing I want to mention is that BRD have committed to issue up to 150 billion over the next 5 years through a medium-term note program. So we are together on this first one, and potentially work together on a number over the next 5 years. So we could be joined to the hip.
Right, and that's what I was talking about. And now, probably, if we can be able to say, if it is possible at this particular point, to talk a bit about the insights into the investor appetite already. I've seen countdowns going on, and I've seen people getting excited left, right, center. What are we able to report right now so far in terms of the appetite, the trends that you're seeing, probably? Yes.
Too early to tell. Too early to tell. The offer opened last week, Friday. However, if we were to bring the whole camera crew to the office, I mean, the phone is ringing across all the desks. Everyone that's client-facing is answering client questions. Our WhatsApp communication line is overwhelmed. So we are seeing appetite. But I think, the culture that we've seen across this offer and offers in many other countries is that people, come in at the very last minute, and that's when you can give an indication of the full sort of appetite. But we are seeing a lot of questions. We started education towards institutional investors 2 to 3 months prior to the issuance, creating awareness of this particular asset class, because it's the first of its kind being issued in the East African market. So I think we're seeing appetite from the banks, from pension, from insurance, and now the offer has been made public, and retail are interested. They're saying the returns are good. They trust the name that's offering this particular bond. I must say the taxes are also interesting. So typical withholding tax on fixed deposits or savings accounts is 15, but for RSC issued bonds, it's as low as 5. So we are seeing appetite and strongly believe that we will have an oversubscription when we report this after the offer, which is towards the end of September.
Interesting.
And because of the D in BRD, we've also tried to educate the segment that typically doesn't participate in such issuances. So we've had a session with all the microfinance institutions to educate them about the product, invite them to invite their clients. We've also had calls with the diaspora because, the 6th province of Rwanda is quite big and actually quite liquid. So we've been having calls via the Ministry of Foreign Affairs, and really thank them for organizing this to make sure that diaspora also comes on board. So we're really casting our net wide to make sure that, we also play our D in BRD and bring the world to this bond.
Play our D in BRD. Wow. Okay. But then let's talk a bit about the transparency aspect, because accountability is also very key. We can promise big, but then sometimes it's difficult for us to be all out to be able to say, okay, out of the 3 KPIs and the ambitious plans, we are actually not doing so well, or we are doing so much. Talk a bit about that aspect of tracking, and reporting of the progress of the journey. What's that structured like at BRD?
So we're not planning to mark our own exam. We're planning to have an independent verifier that is going to come and verify whether we've achieved the KPIs or not. And I think it's part of the credibility of the framework. As you said, it lies on accountability and transparency. But the second thing that we also want to do is not to wait for year 7 to give a sense to the investors whether we're on track or not on track. So we've agreed to, we usually have annual reports and we report on, these are public reports already. So we've made sure that, we are going to have regular reporting to the investors just for information. But at the time T, which is year 5, when the first verification will take place. We will make sure that, and we've committed that this verification will be done by an independent party.
Okay.
And
So,
credible party.
right.
As you can see, the framework is already verified by Standard & Poor's.
Yes.
So that's the level of credibility that we're looking at.
Right.
We're not cutting any corner.
Right, no cutting any corners. I want to also understand the aspect of this whole idea of bringing in ESG as a very key reporting element, especially during financials when, you know, banks are reporting profits and stuff like that. Now this is something that must be embedded in there. And I want to read your thoughts, both of you. Do you feel that this was long overdue, especially with the question of sustainability actually within, you know, the global space and even within the financial spaces? Was this long overdue? Is this something we should have been doing way back, over and above reporting we've made X billions in profits after tax and stuff like that?
No, it's long overdue.
Yeah.
If you look at the financing gap to meet the SDG goals,
Yeah.
you're talking about $2.5 trillion every year.
Yeah.
That's a big number.
Yeah.
And if you're looking at the gap to meet the SDG goals in developing countries, you know, that's to the tune of $1.7 trillion every year. So there's a need really to direct the flow of money towards companies, towards opportunities that are really driving the agenda of sustainability and will allow us to have multiple generations ahead of us, actually having a world as good as the one we live in today. So I think, you know, that's really one key thing. So long overdue in terms of being able to have the flow of capital going to the right place. And I think the second part is there is now a global consensus that companies need to do more than just meet the needs of shareholders.
And CSR.
We're talking about stakeholders.
Yes.
And really the only way to be accountable for this is to report, you know, on how you're actually addressing the needs of various stakeholders. And we see that via the sustainability reports that companies have. And companies have embraced this with enthusiasm. At different, you know, stages. The developing world really started this some time back, but you have exchanges on the continent that have it as mandatory to have sustainability disclosures, and others are recommending, but will move to a stage that it becomes mandatory. So here on the RSC, for example, it is encouraged for companies to have sustainability reporting, and you do have standards that RSC have recommended to companies, and there are companies that have already started doing this. So I think one is to direct the flow of capital where it's most needed in terms of sustainability, and it is an obligation for companies to do that.
It is. Pishet, I mean, he says long overdue, but of course never too late to actually catch up. And of course, he mentions the fact that a lot of financial institutions are actually embracing. And I think even while I was preparing for this show, I did see your organogram for BRD. And I saw after the board of directors before you, there's actually an arrow for sustainability experts and stuff like that to be able to fast advice on how significant is this for you as BRD, but also what would be the immediate term challenges that you feel financial institutions are going to be having in incorporating ESG within their reporting and all that? Just give us an inside look of things.
Look, we pride ourselves now as being market shapers. You can't shape the market if your house is not in order. So for us, it's very important that as BRD, we lead by example, and we show that the D is actually sustainable development, not just development. So for that, we had to create the means of our ambition. We had to make sure that we had technical expertise, that we had board oversight, that we had, you know, structured our business department, or risk department, or board committees, or management committees to have a look directly on ENS. And I like what Siongo says, because I think it's very clear that the future of sustainability and green is not going to be additional financing only. It will have to be transforming the way we do business inside out and mainstreaming these things, you know. So it can't just be a department that's like sustainable finance or ESG. It has to be in everything that we do, in all the departments, the way we procure, the way we, you know, everything. So this is the, I would say, almost the religion that we want to transmit to our clients, to say, don't have a cute little box on your organigram that says like ENS. Like, think about it in terms of your operations, your board papers, your, you know, your recruitment, your risk profile and everything. So for us, that's at the core of what we do. Now, what's hard? What's hard is really the technical expertise. Because right now, there is a concentration of technical skills in the north. And the reality of the developed world is fundamentally different from the reality of the developing world, right? Yeah. So even if I take something as simple as electricity, access to electricity, in Rwanda, our #1 objective is to connect people to electricity, right? In Europe, you're talking about transitioning them from one type of electricity to another. Yeah. So if you bring an expert, you want an expert that's not focused only on transition, but an expert that actually understands what rollout programs look like
and context,
right? And you cannot bill the Rwandan citizen in Nyamagabe the same way you're billing somebody in Denmark. Yeah. So I think the challenge that we've been facing is really to make sure that we have contextualized skills that are able to advise our institutions so that it doesn't end up being a copy-paste from some framework, that was done elsewhere, but something that is really homegrown. And as BRD, we've been part of Team Rwanda that's been developing the taxonomy for Rwanda. And the taxonomy is a big word to say the rules and regulation of what is green and climate resilient in our environment. And the hardest part of the work is really to look at all the international standards and say, what is going to enable us to play our role at the global level without preventing us from developing? Yeah. So that there's no real trade-off between the two, but these are complementary efforts. Right. So this is why we wanted to have the skills in-house first, understand what we're talking about before we reach out to other financial institutions to make sure that we don't give them bad advice. Yeah. We don't give them advice that kills their balance sheet, but give them advice that allows them to grow while, abiding by all the principles that Siongo has mentioned.
Yeah. It's very interesting and definitely interesting times, even for us that report on financial reporting, especially on the aspect of transitioning to embracing something that looks so new for many, even managers, on how to even handle the aspect of sustainability within their operations. But let's drive back to the bond, the sustainability-linked bond, and talk a bit about the aspect of, the timelines, because it's also something very important. Because if we have a plan, 7 years, but within these 7 years, what are we envisioning to see at what point? When do we know, like you said, you're not going to wait until 7 years, you'll be doing the checks and balances along the road. What are these timelines and what is happening within each timeline?
So a couple of timelines. The first timeline is the offer closes on the 13th. So that's the most important timeline right now. Yeah. So we want Siongo and his team's phones to ring a little bit more. Yeah. So that's the first timeline. As Siongo has mentioned, we'll be listing at the end of the month. And then after that, it's really for us to have annual reporting through our annual reports to give visibility to all the stakeholders on how we're progressing on, the issuance. And then at year 5, there'll be a formal assessment that will be done by the third party to really decide, have we met all the KPIs? And then from meeting the KPIs comes, I would say, an adjustment on the pricing for the last 18 months. So if we meet all the KPIs, we have a 0.4%, kind of, I would say, reward as BRD, which only applies for the next 18 months. So if you look at the overall coupon rate, the impact is very tiny for the investors. But for us, it's an incentive to make sure that, we keep the team on track and we make sure that, we move that needle consistently.
Right. She's spoken more about the carrot in this case. That's the price. That's the price you get for achieving the KPI. Give us insights on what happens on the aspect of the stick.
So there's the carrot and the stick. Yes. So there's a stick in this particular case. So every year, BRD should have an external independent assessor reporting on the progress of these particular KPIs. And after the 5th year, there is a particular timeline when BRD should disclose how they've achieved the fulfillment of these 3 KPIs. Failure to disclose by a certain date, there will be 0.4% penalty for the last 3 coupons that BRD has to pay investors. So they're obligated to disclose on how they've progressed on this commitment. So that is the carrot here. So they don't get the upfront reward of having the credentials. They have to oblige throughout. And there's a second one. So typically, for most bonds, the issuer has the right to buy back the bond at any point throughout the life of the bond. But in this particular case, BRD do not have that obligation.
Wow.
Or that right. So they have to, regardless of whether interest rates are very low or very high, you know, they have to have this bond on their balance sheet for 7 years. So investors coming on board don't have to worry that when interest rates are low, BRD will try and buy the bond back. No, they will stay within the bond for the 7 years. So those are the two mechanisms. In some markets, they have what you call a step up. If you do not fulfill the KPIs to a certain level, the interest rate does go up, but it's not universally applied practice. I think it's really based on the jurisdiction. So in this case, those are the two carrots that the issuer BRD has.
Carrots and sticks, yeah. All right.
Carrot, I mean sticks.
The stick. More carrots.
I seem to like the stick better than the carrots.
And as we talk about the stick, I think it's an issue of mitigating the risks so that we avoid the stick. Talk to us a bit about the measures that have been put in place to ensure that there is risk mitigation. Much as you said, you know, anything happens, there's the World Bank to come and support in one way or another. But how are we, or how are you, let me not say we, because maybe, how are you working on that to mitigate this risk that we're talking about?
So if we take the first KPI, this is something that a conversation that we've already started with our clients, especially starting with the commercial banks. And we have for them a carrot as well, because as you know, they are clients, so we give them long-term finance. And we can use this long-term finance as a way to incentivize them to, you know, have these frameworks passed very quickly. So not only do we give them free technical assistance, because we have grant funding for that already in-house in BRD, but we also give them, you know, the carrot, which is if you do it, then you have access to more liquidity for your bank at a cheaper rate. And it's long-term liquidity that is not available on the market. If you look at our own women finance projects, we also have already conducted a technical assistance. We've already conducted a study to see what do we need to do to make sure that women have more access to our own financing. And some of the things are around collateral, you know, the number of trips to the bank. As we know, women have more, you know, activities outside their business activities, so they have less time to come back and forth to the bank. So if you have a proper digital platform that attracts women more, we're also looking at the collateral requirement for women. You know, we're looking at also the way contracts are drafted. You know, are contracts drafted in a way that's easy and attractive to them. So we have a set of measures, you know, that are looking at what do we need to do to drive more women-owned businesses into the BRD, you know, offices. And then for affordable housing, we've been working very closely with the Ministry of Infrastructure and Rwanda Housing Authority. You may have heard of a product that we have called Giriwawe. Giriwawe is actually an affordable housing, you know, loan mortgage product, which is already on the market. So we're looking at actually scaling up that product, which has been quite successful, especially with, you know, Mwalimu Sacco, CSS Zigama. We're now onboarding Umuganga Saccos. So the Saccos have had an appetite for affordable housing because that's exactly the segment that they're banking. So we're looking at, you know, scaling that up and working with them to make sure that we meet the 13,000, you know, affordable housing mortgage products. So we already have a pipeline of products that will help us drive these changes.
Right. And while you still have it, I think I want us to go back a bit on the pricing structure. I think you mentioned, you know, as little as 100,000, but talk to us a bit about how that structure was actually thought within the process. What informed that particular structure, and how do you see this plugging into the overall success of this, you know, bond?
So the bond market, I think, has been in the past heavily skewed towards corporates, and we want corporates to, you know, to buy the bond. We are encouraging them to come. The roadshows that we did with BK Capital was targeting corporates, but because we're a development bank, we also want retail. You know, we want the average Rwandan and the average resident or non-resident in Rwanda, the friend of Rwanda, you know, the American guy who really wants to have an investment in Rwanda and wants to have, you know, an ESG compliant asset to buy into the bond. So when we're thinking about the communication strategy, when thinking about the allocation, we really want to make sure that it's appealing to the corporate, but also to the average citizens. And as you know, having a galvanized capital market is something that is at the heart of government of Rwanda policy. We are a policy lending bank, so the reason why we exist is to implement the government policy at the end of the day. That's why we're fully owned by government. So it was important to us to put in an asset class that's also responding to government's policy objective, which is to see more and more retail Rwandans and Friends of Rwanda actually being active on the stock exchange. And this is one of the vehicles that we thought could be exciting. Now, for the corporates as well, I mean, if you're a corporate bank, let's say, owned by Kenya, a Kenyan shareholder, it would be interesting for you to be the first subsidiary that's able to brand, a very strong SLB, ESG compliant assets, So we also want to encourage the local financial sector to own a new asset class that doesn't exist at the moment in Africa, and also stand out in that group as being, also pioneers of this product.
Yeah, interesting. You want to chip in?
Yeah, I wanted to chip in. I think in terms of the entry level, I mean, it's the lowest entry level that a corporate bond has been offered to the general public here in Rwanda. So I think in terms of structuring it and making it more accessible, that's one achievement. Really at the same level as the government of Rwanda bonds. And really, we have our own internal products, and we've done research which we've discussed with the client. That's really the level for investment groups to come in. So usually for the youth and other parts of the population, there's a lot of group saving. And from research, that's really a comfortable level that the group savings can come in. And for people with slightly more income and coming in at an individual level, there are a few data points to show that certainly is a comfortable point. But I think, going forward, as the RSC digitizes, the BNR have talked about being able to offer bonds via mobile. We expect that these entry levels will become low. And in future, it could be as low as 10,000 francs, maybe even lower. But I think, given the situation, it is an acceptable and an accessible level to the public.
Right. While you still have the mic, Bishop mentioned she would love to see your phone ringing more. And I want to ask you tonight, if someone is watching tonight and probably could be able to share with us, with them also, what is it that would make them call and want to actually subscribe, want to actually get onto this? What is it?
I can think of 5 things. Maybe Pichet can think of 10. I think, the thing, investors always ask is returns. You're getting into an investment for returns. And this particular bond is at an annual coupon rate of 12.85. So you have an issuer that's owned and backed by government, has the same credit rating, which is a measure of the credit risk or the risk of a company, has the same rating as the government. Offering a bond to the public at 0.9% higher than the equivalent government of Rwanda bond. So I think the returns to access a very low risk company are fairly good. The second one is liquidity. So there's returns, and then people start saying, okay, what are the risks? So from a risk perspective, the liquidity risk is lower, given the bond will be issued on the RSC. And in terms of trading on the RSC, we have seen leaps and bounds over the years, starting from a very low point. So on a quarterly basis, we are seeing people selling bonds on secondary market, typically government bonds, to the tune of 20 to 30 billion per quarter. So we're seeing more liquidity. So I think that takes care of that part of the risk. People do borrow for other projects, for personal needs. So this bond could be used as collateral in the bank. That's really subject to the banking credit policies, but we see bonds are generally accepted across all commercial banks as a form of collateral. Then on the tax, that applies to the coupon. It's at 5%. Versus other alternative instruments that could be as high as 15. So those are just a couple of reasons why I would say please come in. And there's the low entry point of 100,000 franc. You can come in as a group. So in terms of opening CSD accounts, groups can come in either through joint accounts or the registered. The type of registration they have as a group. So I think people can come in as groups and also as individuals, and we do believe that lowering the minimum subscription level makes it more accessible. So I think those are some of the reasons, without overselling it, that we would advocate for people to get into this instrument.
Interesting. Bishop, I want to hear from you as well. If there's anything that the viewer should remember, if they have to forget every other thing that we've spoken about tonight, about this sustainability-linked bond, and that would make them make that phone call to want to be part of it, what would that be? Just maybe let's say 3 things.
So firstly, I think and I believe that Rwandans really want to do good for their own country. And if you look at the crowdfunding that we've been doing for Agachiro, for Mutuel, for all these, big exercises of fundraising, there's something about Rwandans investing in something that makes their country better. So the first thing that I'd like them to remember is that on top of the great returns, they're actually contributing to, access to finance for 3 indicators that are key to all our development, collectively. The second thing is for them to know that they're investing in an institution that's committed to growth. And BRD is now a very strong brand. If you look at our financials, it's financially strong, it's strong in terms of the development track record, and that's why we've been able to have, track the support of like the World Bank and Rand Merchant Bank and BK Capital. We're here because the brand is strong. And then thirdly, I think we often talk about saving. There's a lot of campaigns around saving. And this is a good time to talk about investment. Because if you just save and park your money, it's not having the impact for yourself and for the country that we're looking for. So this is a call for investment, and say all this money that you've saved, this is a good opportunity for you to actually invest it in an asset class that is going to make your own environment and your own country better.
Interesting. I want to take time now to just wrap up and be able to talk a bit about the way forward, because we started the conversation talking about the premier the word is running away, my brain is frying. But the premier sustainability-linked bond, but we want to be able to hear more. So when we come to sit on this table one more time or next time, we'll be able to talk about another one, another institution, another. So maybe let's look forward. And Siongo, I want to ask you this. What would it take, probably, and what do you see in future in terms of trends in linking sustainability to the bonds for the future that we'll be able to see? What will it take?
I think, one is education. So these instruments, generally the sustainability-themed bonds have been there since 2008. If you look at the charts, the growth has been very steep. So you're seeing a lot more issuers come in. But if you look at sustainability-themed bonds as a percentage of the whole, it's still quite low. So I think, for us to have more issuances, a lot more education has to be done on the issuer side. Issuers, should get to understand why these bonds are good for them and for the environment, for society, etc. So I think, that's one very key one. I think the second one is incentives. Both for the investor and for the issuer. Structurally, I think there should be a push in the direction of sustainability-themed issuances. So this could be in the form of tax incentives or just ease in the process. So the process, can be lengthy. BRD did it in record time. But I think, easing of that process at a global level would encourage a lot more people to come on board. But there are positive signs on the continent, particularly even in East Africa. The first sustainability-linked bond. There is another listed green bond by another issuer in the pipeline. If we look across the border, Tanzania have been doing quite well on green and social bonds. There's a green bond right now that's of a fairly large size. I think the largest green bond issuance in sub-Saharan Africa. And that's a big feat. And there have been others coming. So there are signs that, this is really catching on. But I think education and really some structural incentives would be needed to make the growth even more steeper.
Interesting.
On our side, we want to encourage people to copy with pride. So any corporate,
I like that.
Yes, that's any corporate that wants to join the bandwagon of sustainability-linked bond, we are really ready to share our lessons learned, share our experience, And the more, the merrier.
Yeah.
They should copy with pride.
Right. What sort of help would you like? What sort of support from where you sit? Do you think even your peers, when you sit with them, when you play golf with them, when you're talking to them anywhere within a social setting, what do they whisper to you that would be able to help? If someone is listening and they could be able to support, like he said, incentives, what else?
I think as Siongo has mentioned, is really awareness.
Yeah.
You know, people need to understand the product. And we're hoping that with this first issuance, it will be a very practical way of getting people to understand the product.
Yeah.
What I've seen with my peers from the banking sector, the financial sector, insurance, is that once you explain it to them, they're actually very excited.
Right.
You know, so the feedback from the roadshow was very positive. What we need to do now is to work together to have more and more issuances, because the more issuances we have on the stock exchange, the better for everybody. So that's why I was, jokingly but seriously also saying that we're here to help. And now our team has accumulated quite a bit of knowledge. Of course, we have the experts, in town, and we're here to accompany any other corporates that's thinking of doing a similar issuance, and travel this journey together.
Yeah, I'd like us to end at this point, unless if there's any burning thing that you wanted to push in before we close.
Just reminding people that the issuance is closing on the 13th. So this is the time to make the call.
This is the time to make the call.
Contact your broker. So there are 7 licensed brokers.
Yeah.
The offer ends on the 13th, as Pichet said.
Yeah.
The application process is fairly straightforward.
Yeah.
Very good opportunity to access good returns, contribute to the good of Rwanda, and also diversify the kind of investments you have, and get into a new asset class.
Yeah.
That's what I would say, just to wrap this up. And thank you for having us here.
Right.
Thanks a lot.
Yeah. Who spoke last? I just still want Pichet to have the last word. So you say yeah, so you still have the last word.
No, it's just to thank you.
Yeah.
I think this is a great opportunity for us to discuss, this very innovative product, and it's really a delight to be here. Thanks for having me.
Thank you both for making time, and of course for sharing the insights in this. And I'm sure there's a lot of excitement out there, and we will need more and more of this kind of conversation so that there is more awareness, for all to be able to get to understand how to contribute to sustainability, especially for Rwanda. Right, and of course, I'm sure that a lot of us would be able to want to understand more of this. And as I always say, the conversation never ends. And of course, it ends on these 4 walls. Yes, it does, but then it continues across our social media platforms. Keep talking. All you need to do is just use the hashtag, #TheSummitRW, and of course, we'll be happy to engage. Of course, Bank of Kigali and BK Capital are all out there to be able to, share their thoughts on this. And of course, BRD is also online, sharing as much information as possible. Get in touch with them. And of course, we'll see you again next time, same place. As always, my name is Eugene. Good night and good luck.